Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, January 5th. Not much on the docket today. Actually, there's nothing scheduled for today, but tomorrow we'll have the FOMC minutes being released, so that will be kind of a big one to watch for as they look for indications of where the Fed's thoughts are. Now, yesterday, there's a few Fed speakers speaking, and a couple of them did mention their forecasts of projections, or at least projected possible 3 to 5 rate hikes this coming year. So there were some projections, and then Fed member Meester had mentioned that she didn't think that China's, for the most part, woes will affect the U.S. economy. They do expect to kind of grow at a modest pace, not like a overwhelmingly huge growth, but more of a modest pace. So I guess we'll have to kind of wait and see. Today the stock market's a little mixed. Start off with a little mixed, but as we've been putting this together for you guys, it actually started going negative now. So far this morning, so it's actually at this moment more negative than it is mixed at the moment. Earlier today, Chinese central bank kind of infused some cash into its markets, kind of softened the trade, which helped out because as you recall yesterday, China actually had to close their markets because there was too much volatility, and it dropped 7% and reached their as they implemented that new system where if that took place back last summer, they implemented yesterday where if it reaches 5, if it drops, the market drops 5%, it will close for 15 minutes to try to let the cooling off period, and then if it reaches 7%, it will just quit for the day. So that's where they reached yesterday. Today a little bit better as they infuse cash, but investors are still kind of scratching their heads trying to figure out how much of a role will China's bad data, manufacturing data, and such will play on the U.S. economy. So there's a lot of investors kind of still waiting to see if even though the Fed doesn't see it or doesn't see it affecting the U.S. economy, a lot of investors are wondering if maybe they could be wrong. So that's going to be playing a big part. And of course, there's not really any news today being mentioned about the whole situation with Saudi Arabia and Iran, other than they severed their ties, diplomatic ties with Iran. So it sounds like they pretty much closed up their embassy. As there was some backlash yesterday after the execution of Al-Nimr yesterday. Also later this week we got the jobs numbers, so that's something else we got to kind of keep our eyes open for as kind of gives indication where the economy's moving. Let's take a look here at the bond market, and right now we're up about 9 basis points. As you can see, as the market kind of was way down, the Dow was down way like around negative 400 and some yesterday, and so that bond market rallied. But as the stock market kind of eased up and kind of closed a little bit better than where it was, it pulled money from the bond market back into the equities markets. So right now we're getting a little bit of a push. We're getting a little bit of improvement. But not enough, as you can see, this box, what that translated is that we had a pricing for the worst. So we had a price change midday yesterday for worse pricing. Today we're up about 9 basis points, but it's not enough for a factor into the worst pricing. So basically we're going to have the same pricing as where we left off yesterday after the price change. All right, folks, you guys have a great day. Be prepared for some volatility as, again, investors are looking at China as their data as they continue the stock market. And, of course, we've had some oil prices, which for once in the last 3 weeks hasn't played a major role in the volatility of the markets. All right, have a wonderful day. Thanks again for watching. We'll see you guys tomorrow. Bye.